Let's welcome on board Ajay Bagga then joining in to discuss the market mood. Ajay, hi, afternoon. What a standing ovation the exit polls have got from the equity markets. But would you say that this is exuberance which is a little far too stretched and one should wait by for the 23rd outcome? Or would you say that given how strong the exit polls are in favor of the BJP government, anything around that as well, even a 10-12% downside is something that the markets would take with open arms?
Yeah, I think, Aisha, the gap is just too large. 42% votes versus 28-29% for the nearest competitor. So the gap is too large to make up. I think we don't have a 2004. It's probably the trend is clear, and that's what the market is giving a welcome to today. Lot of money was there on the sidelines, which probably today a bit of it could have been deployed. I think FIIs came in strongly today, seeing how the rupee moved in the morning itself. I think that's what's supporting the market. I would be cautious till the 23rd, till we have the numbers in, just in case 2004 comes our way and there is some nasty surprise for the markets. But overall the trend looks like there's political stability, political continuity, and that's what the market is celebrating.
Sure. Okay. So, Ajay, as you're saying that overall you feel that the trend will remain intact, given that, what are you expecting from the new government going forward? I mean, what is the market going to be watching out for in terms of cues, whether it be more on reforms or whether it be in terms of perhaps the pressure easing off post these elections? What's the next fillip is really what I'm asking.
Yeah, on the monetary side, Abha, it will be the January 3rd to 6th RBI policy, where we are expecting a minimum of 25 basis point rate cut. Secondly, with the Jalan committee report almost finalized, is there any reserve money moving out from the RBI? I think there would be pressure on the MPC to front-end the rate cuts, given the kind of low inflation, low growth environment we are in. So monetarily, that's the expectation. Second big expectation is more liquidity being injected into the system. Given the model code of conduct was in operation, we have seen that the government money was not flowing through. The cash balances of the government were very high. We are expecting that as the new government gets sworn in on a war footing over June, they'll start clearing those bills and pumping money into the economy. RBI, we are hoping, will bring the economy at least to a balance. Right now, our money markets are in a deficit as far as liquidity goes. And third big thing, so monetary, liquidity, and third would be the fiscal space. How does the government address lagging tax revenues along with a huge need to pump prime this economy, to boost the economy by spending on infra, by spending on sectors which will lift the economy. So that will be seen in the July budget. I think those are the three big triggers coming in. Don't look at the manifestos. Manifestos are only for the elections. The government has shown, even in the February budget, they showed a lot of restraint and a lot of fiscal conservatism. I am expecting that to continue.
Well, just a few odd points and we should make it to that all-time top of 11,856 on the Nifty. Kunal, I guess it's just a matter of time. I mean, who knows, seconds, minutes, hours, or for that matter, days. But what from here, Kunal?
So, I believe that this rally should see a continuation move on the upside. I was looking at the, I'll give you a technical, sort of a picture that, on the hourly charts, on the 60-minute time frame charts, the Nifty on spot levels, which is at 11,030, the RSI is almost at 90. So, you can probably expect that the RSI is at an extremely overbought zone. But generally, when you see such kind of a move on RSI from 20 levels, just 3 trading sessions back, to almost 90, you expect that even if there is a marginal dip, this high should be taken out quite immediately, because the markets are in such strong momentum that even a small dip could result into the markets coming back strongly and hitting that resistances. So I think it's a matter of maybe patience in terms of trading or building a portfolio at current levels. Yes, the Nifty scaled up 400 plus points, but when you look at stock specific opportunities, many of these stocks have not even retraced half of their fall in the last 2 weeks, 3 weeks. So as I said earlier, I think there's an ample opportunity if you try and pick up the right set of stocks and sectors.
Okay.
All right, Ajay, I wanted to get in a perspective from you, because in the poll that we conducted, it seems like financials are where active money managers are advising one can look at as a theme to play for elections, and the other one is infrastructure, or some of those capital goods names. How are you looking at the latter in terms of an opportunity? Are there any specific pockets or any specific companies that you would like within this space?
Yeah, one, I think quite clearly financials and infra are expected to outperform in this kind of a scenario. Overall, if you see pre-elections, the government spending goes up, and the year of the election results, we normally see consumption picking up. We see infra also benefiting because of what the government puts in going into the election. So I think that's a given, and financials, given its size relative to the GDP, given its size relative to our overall markets, we are expecting financials to do well. The rate environment also is conducive. There will be treasury gains as well with the RBI rate cut, which is more or less a given for June 6th. Infra, I would say look at companies which I'm not going for turnaround cases. Look at well-capitalized companies. They will improve their margins. Second portion could be the cement sector. Cement will benefit from infra, from affordable housing, and overall real estate, which should turn over the next 4 to 6 quarters is our anticipation, if not earlier. So cement remains in a good spot. Valuation wise also, it has come down, and it's not as expensive as it used to. Input costs are more or less stable now, and so we expect operating leverage to come into cement with volumes expanding and a bit of margin also expanding with the price hikes that have got taken in April, and some more hikes which came in May. So that will help both margin expansion, operating leverage play. Cement looks one of the good sectors within this capital goods slash construction slash infra space.
Okay, so you're obviously expecting, liquidity to ease up there, Ajay, given some of the sectors also that you're talking about. I'm just interested because, we've been discussing slowdown, we've been discussing debt concerns, we've been discussing fears. How is all of this going to change overnight?
Yeah, it won't. That is a very good point. Right now, this is euphoria, this is sentiments, this is a fear of having missed out that's coming in. It was a light market. What Kunal was mentioning, now it's a very highly overbought market. There are hardly any sellers in this kind of a market. No short players are having the guts to go and short this market, because you don't know how 23rd will play out. Will it be 2009 and 2014 where the exit polls underestimated the final tallies? So if the final tally comes even better than the exit polls, the shorts would be caught out again. So clearly, this is become a one-sided market, and that's why you've seen such a fast and furious up move. It does not get replicated. That's why we are saying it's 1 in 10 years. It's happened after X number of years that you're seeing this kind of a move. It doesn't happen every day. We are lucky to have seen this as investors. All of us have gained today. Nifty is up 2 lakh crores plus. So everybody is a gainer today. Having said that, does it change the picture of the economy? Does it change all the constraints we face? Nothing. Not at all. Your earnings have been disappointing for the March quarter. They will continue to be disappointing for the April to June quarter. Markets are forward looking, that is discounted. You're saying now we are looking ahead 1 year ahead. Markets are not cheap. They are about 15% more expensive than 2014. So somewhere down the line, there will be this kind of mature observation that will come into the market. Right now, the flows and the momentum are taking it up. So you don't argue with that, but you just join in and make as much money as you can. As an investor, you are very well off. New investments, I would not say. And for the brave investor, I would say book some profit today. Probably you are near the high for at least the near term in this market. Earnings fundamentals will drag this market down. When that happens, no one can say.
The sun shines, I guess. That's the call coming in from Ajay at this juncture with respect to the rally that's playing out. Meantime, Kunal, what are you doing with some of the pharma names in trade today?
Well, I'll give it a skip, Avan, because most of these pharma stocks have not come back into any sort of pickup in terms of rally. Dr. Reddy, I think the last I saw, I think it was just about in touch and distance of breaking its 200-day moving average when the stock was down 7.5%. Aurobindo Pharma, also is a stock which I think is struggling. So, when you look at the pharma stocks, it indicates that maybe these pharma stocks could ebb a bit lower. The Nifty can scale up higher. I think you have to wait for some concrete signs of bottom formation. Sentiment-wise, maybe the reaction is extremely damp in terms of the pharma names. But when you generally see a price pick up, I think only then you see the sentiment improving. So wait for the prices to pick up, any sort of bottom formation pattern to try and pick up pharma stocks. As of now, avoid, because I think there is a lot of opportunity on the plate when you see the other sectors which are rallying on high momentum.
Okay, so not necessarily the favorite in the market there. Ajay, while we're on some of these, let's talk about IT as well, the traditional sort of safe haven. Of course, today we're not looking at it for that perspective. TCS stands out, of course, from the pack, but overall, what's your take on IT currently?
IT, given the way rupee has moved up today, and we tend to extrapolate it, there are enough comments that rupee moves to the mid-60s. I don't think so. I don't think the economy is in that kind of a stage. And you have to compare yourself to China. China is going on doing competitive devaluations of the yuan. Even today they devalued. Now we are very near to the 7 mark, and they're making all the noise that we'll protect the yuan and we will not let it depreciate. But they are playing a game of whack-a-mole with Trump, and clearly by depreciating their currency, they are negating the tariff impact on their economy. We can't let the rupee appreciate in this kind of a scenario. You have $300 billion plus of exports at risk. So I don't expect the rupee to keep appreciating, which is the extrapolation today. But who knows, what will RBI decide? That will really decide the whole thing. Or will there be a big rush of foreigners beating a path to India with this new government? I'm skeptical, but it might happen. Who knows? So not to argue with it. So today, IT not looking too good with that rupee strength. But overall, I am a pro-IT person. I have held my positions. I made a lot of money off IT. Right now, it's not looking that good, and fund managers also are not very positive. So the demand for IT is low. You will not see fast appreciation maybe for a quarter. Might be new investors can give it a miss. You have all the domestic sectors that you can benefit from those for now.